Welcome to episode 3 of the Wisconsin Employer Vaccination Forum. The Wisconsin Economic Development Corporation is leveraging its wealth of partners and connections, as well as its platform to offer employers insights on vaccinated workforce. Today's conversation is the third in a series designed to help share some of the key questions and concerns that face businesses, owners, and leaders as vaccination becomes widely available. At WDC, we know that the state's economic health is closely tied to the public health, and to help our businesses prepare for questions and concerns about how we move forward from the pandemic, today's guests represent two incredible resources in Wisconsin. Joining us today is Scott Forrester, CEO, ThinkForward CFO, and Anita Mahamed, partner at Wipfli. Anita, please introduce yourself and your company.
My name's Anita Mahamed, and I'm a tax partner with Wipfli, which is a national CPA firm that's been based in the Midwest. And we got our start in Wausau, Wisconsin, with current headquarters in Milwaukee, Wisconsin. Our firm serves clients from startups to multi-generational companies with specialists in a number of different industries. I'm from Wisconsin, and I've worked in tax planning and compliance for over 20 years with business owners.
Well, welcome. How about you, Scott?
Thanks, Ed. I am a fractional CFO, which means I help startups and growing entrepreneurial companies who have needs for a CFO, but either can't afford or don't have needs for a full-time one. I have experience in the past working as the CFO for entrepreneurial companies in the tech industry, in the toy industry, and in the food industry. And I've started my fractional CFO business, and that's what I'm now doing full-time.
So Anita, I'm going to throw it back to you with the first question. So there's been a number of grants and funding opportunities that many of our in-state businesses have utilized this past year. As they start to manage these budgets and tax planning, what important steps should they be focused on?
It's wonderful to see all the programs that have come out to help business owners get through these challenging times. Many business owners are starting to see some return to normalcy as operations resume and health orders are lifted. As far as budgeting and tax planning, those that receive funds from various programs should really check to confirm the tax treatment of these various programs. Some funds are going to be taxable while others are tax exempt, and the taxability might be different between federal and state purposes. Also, those that received PPP funds and have not yet applied for forgiveness should look to maximize the non-payroll expenses and free up wages that might qualify for other incentives driven by payroll expenses, such as the employee retention credit and families first credits, since for the most part, the same payroll expenses can't be used to qualify for more than one program. And finally, in some cases, the government agency in charge of processing these incentives has a large backlog. So those amending a payroll report to claim a prior quarter credit should be prepared from a cash flow perspective to wait several months before they may receive some of these credits.
Okay. Now, I want to go back to one key item you said about the PPP loans. Some of those are forgivable?
That's correct. If the funds are used for allowed expenses, an application can be completed to apply for forgiveness. So portion needs to be used for payroll. That's the biggest portion. But then there are other types of expenses that qualify for forgiveness, such as rent, mortgage interest, and a few other approved types of expenses.
Great. So that's some key items there that we should make sure that everyone out there knows, right?
That's correct.
All right, Scott, I'll go to you now. As a fractional CFO, you've got exposure to a lot of these companies and their financial needs. What have been some of the more popular solutions employers have found success with as they navigate and continue to navigate shifts in their workforce and in income?
Most of my clients are, being smaller, growing, startup-y kind of companies, they're more creative than some of the bigger companies, and they're more flexible. And, I have found that has been very useful for them to get through this last year. They see it more as an opportunity to rethink how they do things and find new ways to do stuff. One of the areas that's been obviously really important is how we can better utilize tech. I think relating to the the use of tech is people have also seen that there's more of an ability for people to work remotely. And I think that will continue to be, something that companies will learn about and figure out how best to use. And I also think that, people during this time have learned, they've really gone in depth over their finances. They've tried to understand them. Where can they cut things? How can they do more with less? And I hope that they take that information and knowledge and are able to continue to use it as we go forward. I've seen some that have, explored new types of sales channels or new types of ways to expand the products that they offer. So, I think those are all good positives that have come out of this.
Dealing in the startup world, you see that, pivoting is one of the key issues, right? And
absolutely
taking advantage of that. So what advice would you give to businesses right now as they re-engage staffing and hiring and trying to accurately forecast their revenues and expenses, right, in these changing times, Scott?
Yeah, forecasting revenue, which is going to be so important, may be tricky for this next year or two. We don't really know how everybody's going to react. There's going to be, some firms have taken some big cuts. How many years or how many months or years will it take till they get back to even where they were? And then how do you, budget and forecast for that? I've always been a strong believer in multiple budgets, kind of doing a worst case, a realistic, maybe a best case, and see what each of those tells you. And I also think, we're going to have to look at expenses. There's probably going to be additional cleaning expenses that we've never had before, and that's not a bad thing. And, we'll just need to continue also discuss the topic of remote working and how will that keep people engaged. So there's a lot to think about.
I like that multiple budgets. Something I should personally do on my own too, right? So Anita, how has the pandemic affected tax laws, and what are some of those essential changes business owners should know about?
As a CPA who's gone through more than 20 tax seasons, I can tell you that the past two have been the most challenging of my career because of the rapid pace of the new tax laws that coming out to help business owners to weather the pandemic. So for good reasons, but the laws have been modified along the way as well, which has caused some confusion. I think the most overlooked opportunity has been the employee retention credit. So when it first came out, many business owners didn't give it a second thought. You could only apply for PPP loan or the employee retention credit. And to qualify for the credit, the business had to experience either a full or partial shutdown or at least a 50% or more drop in revenue compared to the same quarter in 2019. So lots of hurdles and not as much benefit seen as the PPP funds. But thanks to some recent law changes, those that have received PPP funds now can also apply for the employee retention credit. And the credit's been extended through 2021 with only a 20% drop in revenue necessary. And businesses with 500 employees or less can consider all wages that aren't being utilized for a different incentive. So they could get up to $28,000 credit per employee if they qualify for each quarter in 2021. Big dollars. The credit has also been recently expanded to benefit certain startup businesses that have been in operations after starting February 15th, 2020. So those businesses might be eligible for credits up to $50,000 per quarter.
Oh, that's great. So that's one thing that since we've been, WDC has been providing grants, one of the issues that we saw were some of these companies that started, like that are brand new, right, during this whole thing, and they don't have the historical records, financial records to qualify for some of these funds. So I'm glad that that's happening there. Do you see any other kind of new ones coming into place from, your network?
There seems to be rapid fire law changes and incentives that have been coming out, seems weekly over the last few months. I'm thinking that's probably going to slow down at some point as things are starting to open up and the health orders have been lifted.
We saw lots of innovation happening during this pandemic. Scott alluded to some of this pivoting, right? Entrepreneurship continues to thrive. What incentives or tax rules should startups be considering as they continue to pivot in this new economic landscape?
Yeah, the hot topic going forward is tax reform that's on the horizon, which may mean increases in tax rates. Business owners will want to consider timing certain expenses, whether they want to maximize deductions this year or delay certain deductions that could be otherwise offset to income at higher rates over the next coming years. For instance, startup expenses for a business can be deducted up to $5,000 in the first year, with the remainder being deducted over the next several years. But a business owner could elect to out of the $5,000 deduction and instead spread that startup cost all over several years. There's also bonus depreciation for most fixed assets that a business purchases, such as equipment, which means that a business could deduct 100% of that asset all in the first year. They might want to instead elect out of bonus depreciation and spread out that deduction over several years when the rates might be higher, making the deduction more valuable from a tax savings perspective.
Staying along that same line, Scott, as you watch new companies find their footing and see the innovations that are emerging from this pandemic, what strategies are you recommending for these businesses and startups as our economy reemerges?
You know, one piece of advice I give now, but I would have given before the pandemic too, is, you know, of all the things that someone needs to look at as far as budgets and forecasting, cash flow is the most important thing in monitoring cash flow and trying to have a good forward-looking cash flow that goes X amount of months, so that, you know, if you think there's a month where you're going to be tight, you kind of can know it ahead of time and can react with plenty of time before it happens. I also would advise, you know, many companies have cut back during this last year on spending and capital expenditures. You know, there's probably a pent-up demand to kind of get back and spend that, but go cautiously. You know, we think we're coming near the end of it, but who knows for sure? So dip your toe in the water when you increasing spending. Don't just open the faucet full blast. You know, I always think it's a really good idea to be in touch with your lenders and your investors. And, you know, maybe as you come out of the pandemic, to be back in touch with them. Tell them how you did. Tell them things you've learned, so that, you know, you're being proactive and keep those relationships top of mind.
What tax benefits and procedures are important, but other shifts you can kind of predict as we return to capacity in our workforce? You know, is there going to be greater shifts in operational spending to preserve safety and requirements? I think you mentioned that earlier.
Yeah.
Or incentives for hiring that will affect budgets?
You know, I think there's a lot of topics that will be impacted by all of this. You know, I've mentioned a couple times remote working. So what does that mean in terms for the office itself? Certainly people have leases that they probably just can't get out of, but as it's time to renew their lease, will they need less space? What will it mean for people that are in open offices as we, you know, need to keep people more separate? For those in open offices, how will you accommodate everybody who will be part of Zoom meetings, which they weren't before? I also think that, you know, as we hear different people, the ways different companies are addressing getting back into the office. How do you do that? How are, you know, some people might not want to come so quickly. We'll need to, you know, re-engage them. How can we spend money to make sure that the interaction between people is good and we, you know, get that going again?
All right. Anita, I'll go to you. What are three of the most important things business owners should be thinking about if they received any additional grants or funding this year?
Sure. As I mentioned earlier, those that receive grants or funding should confirm the tax treatment while planning. So that would be the case if they receive any additional funding as well. And they should also reconfirm that tax treatment before filing any tax returns, because again, the tax law keeps changing. And so some incentives that might have been taxable today very well could be tax exempt a few months from now. Next, for business owners that got behind on expenses during the pandemic, these grants and funding could be and probably should be prioritized to catch up on any past due taxes. the penalties and interest can really be costly on those. Business owners that didn't struggle as much and might still have been eligible for some of these funding. And so they might want to take a look at our business operations going to start slowing down? Do they need a rainy day fund, or could they potentially invest some of those funds in additional equipment that might be a write-off this year? Finally, businesses should make sure that they're complying with any requirements that come along with receiving funding. For instance, if a PPP fund was received, there's going to be that forgiveness application and documentation that needs to be submitted. And to the extent it's not forgiven, there will be some payments due eventually. And in many cases, these incentives don't allow for double dipping. So payroll costs that are used to qualify for, say, the employee retention credit can't be used for Families First credits or PPP loan forgiveness. And you can't claim the work opportunity tax credit for an employee that also for an employee where you're using the wages to qualify for the employee retention credit. So there's a lot of interplay.
Thank you, Anita. Scott, how about you? 3 important budgeting or operating expense things that business should deploy to buffer against the new workforce and consumer spending situation we're facing as we return from the pandemic.
A good cash flow is critical. Putting together your budgets going forward, multiple budgets with different scenarios will be good for planning. And I really think, hiring and retaining employees needs to be something that becomes a real critical part as you put together your budget, because I think there will be some challenges in those areas.
All right, so wrapping it up, thank you for both Scott and Anita for joining us today. And thank you again for joining WDC as we continue to share and connect you to the resources that support businesses across Wisconsin. In our next forum, Return to Work Guidance, we will discuss the importance of employers' communication and planning for the post-pandemic workplace. Thank you.